Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week's focus is on banks' 9-month story so far, from FX Windfall to real growth. Investors in stocks need to consistently monitor the quarterly financial performance of publicly traded companies. This financial performance provides vital insights into how effectively a company manages its assets and generates revenue and profit from its core business activities. By analyzing key financial indicators such as revenue growth, profit margin, and cash flow, investors can better assess a company's operational efficiency and overall financial health. Understanding these metrics enables investors to make informed investment decisions. They can assess whether to retain their existing position, hold, sell their shares, or increase their investments, buy more, based on company's performance and prevailing market conditions. By diligently monitoring quarterly results, investors are equipped to navigate the complexities of the stock market and make strategic decisions aligned with their financial objectives. The Securities and Exchange Commission (SEC), the primary regulator of investments, requires all publicly traded companies to submit their unaudited quarterly earnings within a strict 30-day period ending by October 30, 2025. Nevertheless, companies can request extension if they cannot meet the deadline to avoid incurring fines. This information also helps investors set realistic expectations and make plans accordingly. This week, we will focus on financial performance of quoted companies on Nigerian exchange. The banking sector accounts for over 40% of total volume on the Nigerian exchange and is important in any economy due to its role as a financial intermediary. 7 out of the 9 quoted companies have published their unaudited 9-month 2025 or Q3 2025 scorecards. The outstanding banks are Fidelity Bank and FCMB. Following Nigerian banks' successful capital raise to strengthen their capital base, we believe the additional capital will strategically reposition them to pursue large ticket transactions, which should positively impact interest income. However, a few headwinds have arisen in 2025. Chief among these is the decline in interest rates, which could compress net interest margins, and the reduced volatility in the foreign exchange market, which has limited FX-related gains that significantly boosted earnings in 2024. Furthermore, the CBN circulars issued on 13 and 17 June 2025, introducing a temporary suspension of dividend payments for banks operating under the forbearance regime, forced several institutions to make full provisioning. The forbearance regime allowed banks more time to resolve bad loans and comply with regulatory requirements during a crisis. This led to higher impairment charges as reflected in the 9-month 2025 performance. Nonetheless, with stronger capitalization levels and improved regulatory compliance, the banking sector remains better prepared to withstand macroeconomic shifts and sustain long-term value creation for investors. The bank's total gross earnings and profit after tax (PAT) for the first 9 months of 2025 stood at 15.3 trillion naira and 3.3 trillion naira respectively, compared to 14.2 trillion naira and 3.7 trillion naira in 9-month 2024. Accordingly, the bank's gross earnings and PAT increased by an average of 8% and decreased by 10% year-on-year respectively in 9-month 2025. The decline is largely due to higher provisioning due to exiting the CBN's forbearance clause. Access Bank experienced 14% year-on-year rise in gross earnings to 3.9 trillion naira in 9-month 2025 from 3.4 trillion naira in 9-month 2024. However, PAT fell by 2% year-on-year to 448 billion naira in 9-month 2025, largely traceable to higher impairment charges and reduced FX gains relative to same period in 2024. Zenith and UBA followed similar trends with 16% and 3% year-on-year growth in gross earnings to 3.4 trillion naira and 2.5 trillion naira respectively in 9-month 2025. Also, PAT declined by 8% for Zenith to 764 billion naira, while growing 2% for UBA to 538 billion naira. The performances can be linked to improvements in interest income on customers' loans and advancements. However, GT Bank recorded a 9% year-on-year decline in gross earnings to 1.6 trillion naira. The decline is due to a significant year-on-year reduction in FX revaluation gains and an increase in impairment charges, with PAT falling 36% to 700 billion naira. First Bank Holdings recorded a 6% year-on-year growth in gross earnings to 2.6 trillion naira, but a 16% decline in PAT to 451 billion naira in 9-month 2025. The mid-level banks also recorded mixed financial performance in 9-month 2025. Stanbic and Wema grew their gross earnings year-on-year by 12% and 6% respectively to 820 billion naira and 459 billion naira, while Jaiz Bank's gross earnings fell by 23% to 45 billion naira in 9-month 2025. Similarly, PAT grew 52% and 142% respectively to 279 billion naira and 127 billion naira for Stanbic and Wema, while Jaiz's PAT expanded 26% to 23 billion naira in 9-month 2025, despite the weakness in gross earnings. Overall, most banks recorded growth in gross earnings, although at a slower pace compared to the exceptional year-on-year performance in 2024. Despite this improvement, share prices have declined, largely due to the prevailing negative market sentiment as major investors take profit ahead of the implementation of the capital gains tax in January 2026 and the usual end-of-year profit taking by portfolio investors. Consequently, investors are encouraged to adopt a long-term investment strategy as the strengthened capital base is expected to deliver sustainable medium to long-term returns. Q4 2025 and 2026 outlook. Looking ahead to Q4 2025, we expect banks to continue to consolidate gains from their recapitalization efforts while navigating tighter monetary conditions and increased regulatory compliance costs. The central bank's reduction in interest rates could compress margins slightly, but they may be offset by improved loan growth and reduced impairment charges. In 2026, performance will likely be shaped by the full implementation of recapitalization plans, continued expansion across African markets, and stronger digital banking adoption. The sector is expected to sustain profitability through strategic diversification, technology-driven efficiency, and improved governance. Investors are advised to maintain a long-term view on the sector, focusing on fundamentally strong banks with proven management quality, sustainable earning models, and solid dividend track records. Investing in stock involves a certain degree of risk, meaning that there is no assurance that your initial investment will be preserved. However, stocks generally offer the potential for greater returns compared to more secure investment options such as fixed income securities. When deciding how much of your portfolio is dedicated to stocks, it is essential to assess your personal risk tolerance, your comfort level with market fluctuations, as well as your age. These factors can significantly influence your investment strategy and the time frame you have for achieving your financial goals. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed and have a great week. Bye.